Good morning, ladies and gentlemen. So I'm joining you today from my hometown of London, where Boris had an interview this morning at 10 Downing Street. He said, quote unquote, that the 2020 cliff edge date is extremely likely. We also saw that the US removed the Chinese currency manipulation tag that was stuck on the currency ahead of the signing of the Phase 1 deal tomorrow, and also that China would ramp up their purchases of US cars, aircraft and energy. If we look at indices, we saw that the Asian session rallied. We saw the Kospi up, the Nikkei 225 up, and the Australian index up. However, this morning we've seen that the European and US futures have dipped into the negative this morning, but insignificantly. The FTSE is flat at minus 0.01%, and the Dow Jones futures is down 0.22%, and the S&P 500 futures is down 0.17%. If we move to shares, we saw some earnings updates. We saw that Boohoo boosted their full year estimates for EBITDA from 10% to 10.2% band. We also saw that in their Christmas trading update, revenues were at 44%, which is huge, beating estimates of 43%. The share price is up 4.8% as I am speaking to you, and we can see on this diagram behind me that Boohoo broke out of the 316 resistance, which has now turned to be support. I'd look at buying around this sort of level if it comes back to this. We also saw that the UK government might intervene with the airline Flybe, providing tax cuts. PageGroup also gave their earnings update for Q4, and these were negative with drags from China, France and the UK. The share did open up negative but has since come back to positive over 1.7%. If we move to commodities, we see that commodities are down pretty much across the board. We see that gold has continued to fall with stocks rallying. It is down over 0.3% this morning at 15.44. It dropped down further to 15.36 this morning but had recovered since. We also see that oil has continued its bearish trend with both US crude and Brent down this morning. If we move to the FX sphere, we see that the pound USD has continued to fall and broken below the 1.3 level of support, as we can see in the diagram behind me. We can see that it has broken below this because of Bank of England cuts potentially coming in the next meeting. This is dependent on the UK data. We saw that yesterday the GDP data turned negative 0.3%. If we move to the Euro USD, we see that the Euro USD is flat for today at 1.13, and we also see 113. Sorry, and we also see that the USD Japan is flat this morning. If we move to bonds, we see that UK gilts are continued to be down this morning, which means that prices are rising with worries of a Bank of England cut. We see that the UK 2-year and 10-year are both down. If we look at the US, we see that the US 2-year is flat, but the US 10-year is down. And if we look at the German bond, we see that the 2-year is flat and the 10-year is actually up slightly. Thank you for listening.